Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. US President Donald Trump says his administration will impose new punishing sanctions on Iran, adding that the US is willing to embrace peace with all those who seek it. State Bank of India has a new offering in the real estate financing space. The product also offers a guarantee to home buyers in case the project gets stuck. Bharti Airtel launches a QIP to raise 14,400 crore rupees at a floor price of 435 rupees per share. The National Company Law Tribunal has warned the Committee of Creditors to Jet Airways of contempt proceedings if funds to the resolution professional are not released by the 20th of January. And Asian markets begin trade on a positive note after tensions between the US and Iran begin to ease. Let's talk about the US markets first. They staged a comeback on Wednesday after President Donald Trump seemingly toned down his rhetoric against Iran. The Dow Jones ended closer to the 29,000 mark, while the S&P 500 and the Nasdaq also ended with healthy gains. Ranita Young of Bloomberg News wraps up Wednesday's Wall Street action in this report.
U.S. stocks closed higher on Wednesday after the shock faded from conflict between the United States and Iran. During the session, we saw the S&P 500 capping a recovery in futures that had fallen as much as 1.7%. Now, McDonald's and Beyond Meat continue to expand the testing of its plant burger. As a result, Beyond Meat shares were a little bit higher during much of the session. Lennar's fourth quarter revenue beat the highest analyst estimate. Shares rose on that news, and Walgreens Boots Alliance was down because it missed estimates for its first quarter adjusted earnings per share. Meanwhile, gold was down. Oil also was lower. It hit its lowest since November. And palladium, however, reached a new high. That was the hottest commodity of 2019, now breaking through that $2,100 an ounce level. And that's a look at your Wall Street action on Wednesday. In New York, I'm Ranita Young for Bloomberg News.
All right, let's turn to the Asia Pacific region. I'm joined live by Rosalind Chin, who's joining us from the Bloomberg studios in Hong Kong. Good morning, Rosalind. We were speaking about this yesterday, the all-important Trump address in the context of everything that we've seen so far this week, and seemingly a de-escalation there. And I think investors across the board are heaving a sigh of relief.
I think you're right. They are indeed a little bit relieved that it does seem like both sides have stepped back a little bit from the brink. So we've got the MSCI Asia Pacific up by 1% right now. Most of the major indices across the board making gains this morning. I just want to look quickly, though, at some data we've just had out from China. We've had PPI and CPI for the month of December, but both of them were a little bit of a miss. So producer prices for December, year on year, down 0.5%. Estimates were for them to be 0.4% lower, and for consumer prices, those made a gain of 4.5% year on year against estimates of 4.7% year on year. So not really quite reaching the estimates that had been made by economists. We're also seeing some numbers out for pork prices. Now, pork prices, of course, have been soaring in China due to African swine disease and the limited less quantity coming into China, because China is one of the world's, if not the world's, biggest consumer of pork. Numbers coming out showing that December pork prices rose 97% on year, but that is still an improvement because in November they were up more than 100%, 110% in November. Prices month on month actually fell. So pork prices there looking a little bit better in terms of for the Chinese consumer. CPI and PPI, though, not great. We'd see that factory deflation, of course, has been easing, though, but not by as much as expected. Elsewhere around the region, we've got the US, China stepping, US and Iran, of course, as you mentioned, stepping back from its escalation. We're seeing this rebound in the markets, of course, very rock and roll for markets like Japan, which only came back online on Monday after a prolonged Christmas vacation over the New Year, rather. Nikkei up 1.8%, Topix up by 1.4% right now. Hang Seng making gains of more than 1%. Shanghai Composite up by almost 2/3 of of 1%. And the S&P ASX 200 up by about 1% at this point in the session. Havens, of course, steadying. We've got the Japan yen at 109.19, so weakening a bit. We've got gold at back below 1,600. Now it's 1,560. And, of course, oil prices falling back a little bit as well. Well, actually, oil prices, WTI is holding out at about $60 a barrel at this point in time. But most of the havens are starting to steady and ease a little bit. So on the tensions front, that's looking better. On the data front, we have to look at that a little bit more closely as the session goes on. Back to you.
Thanks so much for that, Rosalind. Now, I do want to speak a little bit more about the US-Iran situation. US President Donald Trump toned down his rhetoric seemingly against Iran, but said that the US will be imposing tougher sanctions on the Islamic nation till they mend their ways. Let's first listen in to what he had to say yesterday.
As long as I'm President of the United States, Iran will never be allowed to have a nuclear weapon. Good morning. I'm pleased to inform you the American people should be extremely grateful and happy. No Americans were harmed in last night's attack by the Iranian regime. We suffered no casualties. All of our soldiers are safe, and only minimal damage was sustained at our military bases. As we continue to evaluate options in response to Iranian aggression, the United States will immediately impose additional punishing economic sanctions on the Iranian regime. These powerful sanctions will remain until Iran changes its behavior. The time has come for the United Kingdom, Germany, France, Russia, and China to recognize this reality. They must now break away from the remnants of the Iran deal, or JCPOA. And we must all work together toward making a deal with Iran that makes the world a safer and more peaceful place. We must also make a deal that allows Iran to thrive and prosper and take advantage of its enormous untapped potential.
All right, let's look a little closer at that statement. And Joe Sobzik of Bloomberg News has all the details about what this means for the conflict between the two nations.
Certainly got an opportunity to do so. Iran clearly did not want a direct confrontation with the U.S. There were indications that there was a warning before the missiles went off, and then they were launched at parts of the air bases that were not populated or had U.S. forces in, and there were no U.S. casualties. That gave President Trump an opportunity to switch gears and offer perhaps a diplomatic opening to Iran, and it remains to be seen whether they also will reciprocate now. But for the time being, at least the tensions have eased substantially, despite the threat of additional sanctions put on by the U.S. The U.S., of course, already has many sanctions against Iran, and there's limited targets for those going forward. So the president opened the door to negotiating a new nuclear pact with Iran, and that may be the next step in the diplomatic dance.
Well, that could be a tough one because they haven't been willing to give up any claim on eventually developing nuclear power yet, Joe. But, you know, our colleague Bobby Ghosh, BloombergQuint columnist in London, specializes in covering the Middle East, wrote a column today saying, don't kid yourself, this is not over. Iran's quote-unquote bloodlust will not be satisfied yet. Is there anybody in Washington who's still worried about this? Because there's a lot of optimistic talk on the surface.
There is, and there is still concern about additional responses from Iran that may be much less direct. They have proxy forces throughout the region and in other places. There is also still a concern about any cyber attacks. And Iran does tend to play the long game on these sorts of things. They knew that they could not confront the U.S. directly in any sort of military confrontation, so there may be some things left that they're patiently waiting for to act on. So, but at least for the time being, both sides are willing to give it the appearance, at least, that there could be an opening here.
All right, let's take a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
We start with the latest on Brexit. The European Union is on course for a new Brexit clash with the UK, saying that a full trade deal this year is impossible. New Commission President Ursula von der Leyen told an audience in London that the EU is ready to work around the clock to strike an agreement, but warned Boris Johnson that there simply is not time for detailed negotiations. Johnson has repeatedly demanded a deal by the end of the year. Meanwhile, pressure is mounting on Indian Prime Minister Narendra Modi. This after 250 million people took part in a nationwide strike Wednesday in protest of the government's economic policies. Transport and banking services were disrupted as employees took part in the action, which was organized by the country's major trade unions. India is struggling with the slowest economic growth since 2009. And to the latest on Carlos Ghosn, the toppled Nissan boss has gone on the offensive in his first comments since fleeing Japan. He described his arrest 14 months ago as brutal, saying he was ripped from his family and the world as he knew it. He also blamed former Nissan CEO Hiroto Sakawa and others for what he called a coup to destroy him and prevent further integration with French carmaker Renault.
For 17 years, I was considered as a role model in Japan. More than 20 books of management were written about me. And like this, in a minute, all of a sudden, few prosecutors and a bunch of executives in Nissan say, you know what? This guy is a cold, greedy dictator.
To the global economy now. The latest survey from the World Bank says that global growth will likely pick up modestly this year and next, but less than previously forecast despite the easing of trade tensions. The bank says expansion will accelerate marginally to 2.5%, largely because of stabilization across a handful of emerging economies. However, it warns that global growth conditions remain fragile. And to Hong Kong, protest clashes continued Wednesday night throughout Hong Kong, while police arriving to break up a small-scale demonstration in an eastern district of the city. Protesters had blocked roads near the site where a local student had died back in November. He'd fallen from a multi-story car park during a police operation to stop a previous demonstration. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to the India markets now, and Agam Vakil is here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Agam, seemingly a little bit more positivity based on what Donald Trump said yesterday in his address, a de-escalation seemingly. So we're looking at a positive start today?
Yes, absolutely, Alex. We certainly are expecting a positive start. Let's wait and watch as to how things pan out. But for now, what we are keeping an eye on is, well, the SGX Nifty futures, which is advancing by around 0.8%. Some strength coming in. Let's move on and talk about some of the other factors as well. We have the Nifty 50 index, which is, which was down yesterday. It did end with some gains or some losses, but eventually, let's wait and watch whether or not we could have some advances coming in. Nifty Bank, Nifty PSU Banking Index also looking at a decline there. Moving on to your area picture, we have advances in Vedanta, ICICI Bank, Tata Motors, and HDFC Bank. Along with the gains in some of the other stocks. Of course, Infosys will be in focus considering we are expecting earnings tomorrow. In terms of fund flows, we saw FIS sell to the tune of around 515 odd crores. GI is buying stock worth 748 crores. So that's another important fixture to watch out for. Moving on to your contributors, we did have a fairly mixed picture across the board. TCS, Bharti Airtel and Ultratech Cement stand out when it comes to gainers, as against Infosys, L&T and Reliance Industries, along with Kotak Mahindra Bank. Kotak Mahindra Bank will be in focus on account of its, case in the Bombay High Court right now. Let's talk about futures and options then. And that's where you have, absolutely no change in futures. The Nifty banking futures, that's where we are seeing a little bit of traction, so 15% increase in open interest. And moving on, we have your 500-point range between 12,000 and 12,500. And in terms of change in open interest, we are keeping an eye on something like the 12,000, 12,100 puts, which saw unwinding even as the indices came off, even though we saw a little bit of recovery yesterday as well. Let's talk about some of your other factors. We have your India VIX, which advanced by around 7%, 15.6. And we did have the Nifty put call ratio also edge up higher to around 1.2. In terms of stocks, we are watching out for a handful of them. So we did see an increase in open interest for GSPL, Vodafone Idea and Eicher Motors. Eicher Motors is actually looking at a little bit of a cut there. And in terms of unwinding, stocks that did see declines in open interest included Apollo Tyres, NTPC and Bajaj Auto. But let's wait and watch, Alex. It's been extremely volatile. On day, we have advances. On certain days, we have, losses. But eventually, we have also seen a lot of gyration on an intraday basis. So, traders do need to keep an eye and be wary of the fact that there could be a little more volatility coming in.
Thanks so much for that, Agam. All right, on to individual stocks that you have to watch out for in trade today because they're in the news. Somit Sarkar is joining me to tell you the stocks in news. Good morning, Somit. What's on your list today?
Good morning, Alex. I'll start off with Kotak Mahindra Bank firstly because the stock will remain in focus on the back of the hearing that is there related to the RBI case which will come up today in the Bombay High Court. Now, the case relating to Kotak Mahindra Bank is on meeting the promoter shareholding norms. Along with that, Bharti Airtel, because they've launched their QIP to raise close to 14,400 crore rupees at an indicative floor price of 435 rupees per share. That is at a discount of 5.2% to yesterday's closing. Now, the QIP would lead to an equity dilution of 6.1% on the expanded equity base, and the proceeds of the issue will be used for payment of the HAR dues to pay its debt and for general corporate purpose. Separately, the company will also be raising close to $1 billion via issue of foreign currency convertible bonds, which also has a green shoe option to raise another $250 million. And separately, the company also came out with some quarterly updates in which it said that in the third quarter of financial year 2020, Bharti Airtel has added nearly 2.1 crore 4G users, which is the most in at least the last 9 quarters. SBI and Suntech Realty, because SBI has launched a residential builder finance loan with buyer agreement. Now, the bank has signed a memorandum of understanding with Suntech Realty for financing 3 residential projects. Now, the project aims at reducing the chances of insolvency petition in residential projects, and the product is to safeguard from home buyers financially with focus on affordable housing of up to 2.5 crore rupees. Adani Green Energy, on the back of the quarterly update on the third quarter, the solar PAF was remained lower at 97.3% versus 99.2% last year. Now, this reduction in average portfolio plant availability was seen due to waterlogging as a result of heavy rainfall. Along with that, on the wind portfolio, the capacity utilization factor was higher at 21.5% versus 8.3% last year. Strides Pharma Science, because Dr. R. Ananthanarayan was appointed as a new MD and CEO of the company with effect from January, and the company's founder and ex-CMD Arun Kumar will now become the chairman with effect from 1st April. Now, Macquarie says that this is the second instance of Mr. Kumar taking a backseat and Kumar to focus more on Stelis. And lastly, Harita Seating System, on the back of the Bull deal, where 3 Sigma Global Fund acquired nearly 3.6 lakh shares via Bull deal, where LCI Estates was the seller.
Samit, before I let you go, here's wishing you a very, very happy birthday.
Thank you, Alex.
All right, let's take a look at this next piece of story, which should be very interesting for a lot of you. It's been quite a ride for the Indian rupee in the decade gone by. Depending on how you look at its performance, you could be left with a mixed set of emotions. Ida Dugal explains in this report.
we've just kicked off an entirely new decade. Yes, I know we're a few days late, but it's still early days, and there's much optimism about what lies ahead. But it doesn't hurt to keep an eye out on the rearview mirror. If you turn that rearview mirror around to the rupee, though, you will come away with, as we're saying, mixed emotions. The Indian currency actually didn't have a very good decade. So if you look at the Indian currency vis-a-vis its Asian peers, it was the worst performer actually in the decade. Over the 10-year period between 2010 and 2020, the rupee lost 52% against the US dollar. It started the decade of the 2010s at a 46 to the dollar kind of level, and it exited at about a 71 level. So during that period, you've taken out psychologically important levels like the 50s, the 60s, the 70s. You almost hit 75. You're just shy of that, and you closed the decade at about 71.5. Now, some of the comparative economies like Indonesia did a little bit better, lost 47% against the US dollar. The Malaysian ringgit was better off and lost under 20%. Well, the Chinese chart is there, but it's not really a comparable currency given the tight controls that the Chinese government maintains on its currency markets. Now, that's the glass half empty, but everything is relative. So if you change the countries that you're comparing the Indian rupee to, you come away with a very different perspective. So if you compare the Indian rupee to its BRICS peers, actually the Indian rupee performed the best out of the lot. So while we lost 52%, you had the Brazilian real, which weakened very, very steeply. The dollar gained 134% against the real. The dollar gained 107% against the Russian ruble. And of course, you had the South African rand, which depreciated 89% against the US dollar. So like I said, you change your lens and the Indian rupee doesn't look so bad after all. The 52% depreciation number looks large in its entirety, but this is over a 10-year period, so the average depreciation is not something that you should be particularly concerned about, especially given the fact that this decade was a period where we did have high and volatile inflation, at least for parts of it. So the inflation differential story was against the Indian currency. Now, we're not going to go back and tell you everything that happened over the last 10 years, but we will point out a few notable moments. Well, we had the 2013 taper tantrum, which reminded us that we had vulnerabilities ranging from forex reserves, which were not considered adequate, to very high and volatile inflation, and of course the twin deficits. But at least two of those three problems are in the process of being tackled. We've got inflation, which is supposed to stay within a good band. We've got forex reserves of more than 450 billion. And of course, deficits, well, we're still work in progress on bringing down our twin deficits in a structural manner. That wasn't the only bout of uncertainty. We had 2018, a year in which you had outflows of nearly 80,000 crore, both from equities and debt. That pushed the rupee to what is now its record low at about 74.46. But, you know, in 2019, we had a good year. We got 1.35 lakh crore in inflows. So it reminded us that just as money can flow out, it can flow in. And that markets are fickle. What are we looking forward to in the 2020s? Well, I'll tell you a couple of things that you want to keep in mind. One, if you do have low and stable inflation, does that mean that the pace of depreciation on the rupee should come off? Two, if you do open up your debt markets to more foreign flows, could you see a lot more inflows, but could you see a lot more volatility? And three, does India retain its position as pick of the pack among the emerging markets, or are the growth issues that we're facing right now going to derail that? For the answer, well, tune back around in 2030.
All right, there you have it. Now, on to data from the mutual fund industry. Inflows into equity mutual funds saw a rebound in December after a 3-month decline. Multi-cap and small-cap funds saw a rise in investments compared to the last month, and the SIP book too remained at an all-time high. Yash Upadhyay spoke to Amphi CEO NS Venkatesh, who said that they're expecting a growth rate of 16 to 18% this year. Listen in.
On the equity side, with the positive numbers coming up, shows that as there is a renewed interest coming back into the markets, and especially with the budget around the corner. So I think maybe people are trying to take some positions based on the budgetary sort of expectations. So I think that has brought in a new wave of inflows into the equity funds. New fund offerings have mobilized a lot of money. There's no doubt on that. But the focus funds or the multi-cap funds are all like a risk management sort of a strategy that the investor is trying to play around, trying to say that instead of going into only large cap or only to small caps sort of thing, they are looking at broad basing their investments that they are planning to do. So I think that is where the money is coming in. In the last month, the number of SIP accounts was somewhere around 9 lakh new folios which got opened, and SIPs which got matured or maybe a little bit discontinuation is somewhere around 5.9 lakh SIP accounts. So the net is somewhere around 3.71 lakh fresh additions have happened. The last calendar year we grew at around 16%. So hopefully in this new year, with all the steps being taken by the government of India for promoting the economy and all those things, I personally believe the market should look up and the corporate earnings should go up. So that is a premise under which I am looking at it, and with much liquidity back into the system, we should see the equity markets doing well, and with interest rates also falling, the debt market also should do well. So with both these markets doing well, we should see the mutual fund market doing reasonably well. We should see at least around 16 to 18% growth for the next calendar year.
All right, several stories available on the website BloombergQuint.com for you to read at leisure, and there will be more, of course, over the course of today, but let me take you through just a couple of them. The National Company Law Tribunal yesterday warned Jet Airways Committee of Creditors of contempt proceedings if they do not release interim funds to the resolution professional by the 20th of January for the completion of insolvency proceedings. And the Competition Commission of India has said that companies like Amazon.com, Flipkart, Swiggy, Zomato and Oyo must regulate themselves on aspects such as search ranking, data collection, discounting and revision of contract terms with sellers. That's all you need to know going to trade today, but do stay tuned. There's clearly lots to talk about. This is Bloomberg Quint.